You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, happy Friday. My name is Jonathan Rose and welcome to Master Than Trading Live. At Master Than Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, share my thoughts, go over the market, and once in a while we'll share our trade of the day. Hey, welcome everybody on YouTube. Got the chat going, up and going. Telvin, sorry I messed with the sound. Hopefully the sound is okay. But yes, I just messed with the sound. So if there was any issues, that was on me. That was not on production. Telvin, my apologies, my friend. Thank you for fixing that. 4 topics today. Every day we do 4 topics, or we try to do 4 topics. Today, I want to share some wisdom with you to start out. We're going to talk about short-term options. I got a great mailbag questions. And then after, we're going to talk about vertical spreads. If you're trading options, I want you to understand what vertical spreads are. Like, let's say if you're trading options, you have to understand what vertical spreads are. Vertical spreads are a great way to manage your trade. They're a great way to lessen the risk. And they're a great way you could figure out your odds. So you know, okay, I'm risking 200 to potentially make 600. 3 to 1, is that something that I want to do? So make sure that you learn vertical spreads. We'll go over that as well. But let's get going. We're going to start off with some wisdom. And for the wisdom, I brought in a friend of mine for a long time, somebody you guys might know as well, Yoda. Yoda spits wisdom. And you guys probably didn't realize that Yoda is incredibly schooled on the mistakes that traders make. So here it is. And this is true. This is always going to be true. 10 traders, 10 people, take the exact same trade or the exact same investment. Every single time, you're going to have 10 different results. Trading is emotional. Okay? I got a great call. Here, I'm going to go on a little tangent. Trading is emotional. I got a great call yesterday. You know who? My brother-in-law. Love this guy. My brother-in-law is a doctor. My brother-in-law called me. He called me 3 times. I'm like, he doesn't call me very much. I call him back. Hey, Bri, what's going on? It was yesterday morning. Should I buy Bitcoin? Should I buy Bitcoin? I'm like, Bri, should you buy Bitcoin? Bitcoin's trading 98,000. You didn't call me when Bitcoin was trading 5,000 or 15,000 or 25,000 or 40,000 or 60,000. Now at 100,000, you're a buyer? People want confirmation in the market. The market is never really going to give you confirmation. My advice to Brian was, if you're not a buyer at 40, 50, 60, 80, or 90, you're not a buyer at 100. Because if you buy at 100, and if it goes down to 70, you're going to feel awful. And you're not going to be able to buy more. So 10 traders take the exact same trade. You will always get 10 different results. The reason I'm sharing this today is because we've been talking a lot about our short-term options. We have our short-term options live event coming this Tuesday. Make sure you hit the QR code. It should be popping up on the screen every once in a while. With your phone, take it out, shoot that QR code, and register for the event. Registration unlocks 4 days of training videos starting Saturday. Saturday, Sunday, live event Monday, live event Tuesday. As you're going through the ODTE short-term options trading. If you have any questions, we have our team standing by. Call 1-800-393-0362. Leave a voicemail. We're going to go through all the voicemails and we're going to take the questions that either we're going to answer on Monday or we'll answer in our live event on Tuesday. Okay. We've been talking about QQQs and our line in the sand. QQQs is the NASDAQ. When we talk about our line in the sand, we're just looking for levels that are overlapping. You notice all these levels are overlapping? For 4 days, there was the exact same high and the exact same low. So therefore, when it goes offer down here, we could be a buyer. Maybe up here, we're looking to get out. And so that's the trade that we had throughout the entire week. Now, let's go to short term. This is the entire week right here. Okay, this was the previous week. Okay, this week, the line in the sand, pretty much every day, the lows were darn close to being the same. So finally, on Thursday, we were able to do a trade where we bought when it went offered and ended up making some money when it went bid. But what ends up happening in a community is, as my friend Yoda tells us, 10 different traders take the exact same trade. You will always get 10 different results. Because, like my brother-in-law, Brian, some of us need the market to go in our direction to have that confidence that, okay, now it's time to get in the trade. But that's where you get into trouble, because you want to get into the trade when it comes down to these key levels. You don't want to wait until it starts moving and then you say, okay, I can get on. It's right. It's moving in my direction. It just doesn't work that way. So QQQs, if we come here, Shelly, yesterday, or I think this was 2 days ago now, was able to make an ODTE trade at $1.90 and take off at $4.10. Awesome trade. Carmine, 7 big winners, 3 small losers for the week. Great trade. Katie, I closed out breaking even. I couldn't take the pressure anymore. I get it. That's why we want to build our memory bank. And I'm not sharing this to poke fun at all. I'm just saying that you need a reason for being in a trade. You need to be confident in that trade. You need to get in at good levels at that trade. And then you need to be patient. 10 different traders can take the exact same trade and you'll always get 10 different results. It's so important, and it comes down to just being confident in your trading. I've tracked my ODTE trades since we started, since 10/21 or the last month. I'm up over 62%, but smart, only trading 1 and 2 contracts, not to be too stupid. Excellent share. 10 traders take the exact same trade. You'll have 10 different results. Guys, any questions about that? That is an awesome topic to call, leave a voicemail, ask whatever questions you have. I'll hear them and we'll try to cover that live. Questions? Questions? Oh, mailbag question. Great question. Heading into Friday, as well as the holiday shortened week, is it best to not establish option positions with less than 60 days to expiration due to time decay during the period of Thanksgiving and New Year? So the question is it okay to trade, but do not do trades that are less than 60 days? Do not buy options. Calls or puts. Unless you absolutely love. Now, the problem with this question, because this says, okay, should we do March options? Should we do April options in 2025? Well, they're still going to decay. Just like Thanksgiving, the week is pretty much a very, very quiet week. These will decay as well. So there will be some okay trading going into the end of December, but after that, we will go to sleep for the rest of the year. Now, there is a really fun trade that we're going to share next week. I like to call that the turkey trade. That happens once a year, but that happens only on Thanksgiving. But otherwise, yeah, you want to be careful. You don't want to just keep buying options, because they're going to decay. Vertical spreads. I want to do a quick overview on vertical spreads because, as I said at the beginning of this program, all option traders, if you're risking any money, I want you to understand what vertical spreads are, okay? It's just something that you need to learn. So let's go over GDX. GDX is a gold miner, okay? Last trade, 38.44. Now let's say I want to buy those 40 calls. If we buy the 40 calls, it's $1.15. 40 calls, buy these suckers. And why would you buy them? Because you think the stock is going to go up. Let's say you bought those 40 calls for $1.15. You have $115 at risk, right? You can never lose more than your $1.15. What you can do is you're long from 40. The stock's at 38.44. If the stock stays here, this 40 strike is going to go to zero. You could sell the 45s. If you buy the 40s and you sell the 45s, and let's say we sell these for 25 cents mid-market. Well, I really don't like how this looks here, so I'm going to do it all over. And I'll do it here. Your 40s were $1.15. Your 45s were a quarter. So your ultimate risk is going to be 90 cents per contract. $1.15 minus 25. So your risk is 90 cents per contract. The most that you can make is the difference between that spread. $5 minus that 90 cents that you paid, which equals $4.10. So reward in this trade would be $4.10. Reward and your risk is 90 cents. That's why people do vertical spreads. Really get familiar with vertical spreads. It will make life lots easier when you're making these trades. Okay, guys, this weekend starts the training. Make sure that you're registered on the QR code. Write down the phone number too, because as you're going through that training, that's when you want to ask questions. Okay, write down your questions, call the voicemail, ask your questions. That way we can all learn together. Everybody in All Access, you guys don't go anywhere. We're going to be talking about XRP. We're going to be talking about a coin that we've been invested in since 2021. All right, guys, thanks so much for watching.